Today we are proudly presenting our Q1 results for 2019, and with me today I have our CEO and President, Mr. Michael Eriksson. Can you please highlight a few key takeaways from what we've seen so far this year?
Well, thank you for listening, first of all. But I think it's a stable quarter in general. There are some good things and some more challenging things or takeaways, I think, from the quarter. On the positive side, we see a clear step up in profit, in EBIT. So it's up 39% year on year, which is really encouraging and leading the way to our targets for 2020. We also see on the leverage side that we are taking steps in the right direction. We got a net debt to EBITDA, which is the leverage target or measurement that we use, at 4.0, which is down from 4.3 in the fourth quarter of last year. On the investment side, clearly a very strong quarter with an ROI of 16%, well above the levels that we are targeting for the end of 2020, and a very strong performance in general on the investment side. More challenging on the CMS side, where we see our CMS margin dropping down to 22% from 25% last year. And the explanation to that is Italy and Spain. In the other countries, in total, we actually see a little bit improved CMS margin, but overall 22%, which is well below our targeted levels.
As you mentioned, you've seen some challenges in Italy and Spain in particular. Can you elaborate a little bit more on what that actually means, and what are the challenges and what are you doing to fight against those?
Well, I think, first of all, it's important to look at the difference between Spain and Italy. And it's true that we have some clear challenges in Spain. Those are not new to us. We've had them now, and I talked about them before. What we see is basically a rapid decay in our portfolios, or you can say, for a number of years ago, we entered into a number of carve-outs with counterparties on very favorable margin levels. Those are gradually maturing, and some of our clients have opted to actually sell the volumes to others. So we have a rapid decay, and with that comes also lowering or descending margins rapidly as well. And that actually affects the group. I think in Spain they've been very good in 2018 to do mitigating action and work with the underlying cost structure in Spain. Unfortunately, we don't see the full potential and effect of that in the first quarter, and the trend is continuing. But I know there is a lot of activity going on and thinking in Spain to mitigate that. But we also made 2 acquisitions by the end of last year. We bought a portfolio from Ibercaja, and we made the agreement with Bank Sabadell around the acquisition of Solvia. 2 important transactions for us to add volume and partly mitigate the decaying effect in Spain. So that was Spain. Turning over to Italy, as you know, we did a very large transaction in Italy last year, a joint venture with Intesa Sanpaolo. That transaction, after a lot of hard work, closed in the end of Q4, end of November last year. But as you can understand, there's been a lot of initial work and ramp up to get that portfolio and that joint venture to kick off and work well. In total, we are actually above plan in Italy, even though it's not a massive above plan, but clearly above plan, which is good. But if you look at it on the investment side, we're doing very, very well and have a 26% return on the portfolio. But on the CMS side, depending on a lot of ramp-up cost in getting the joint venture to work, we have a very low margin, around 8%. But the team in Italy have promised me that during the year they will mitigate that, and we are looking for a targeting margin of around 30 to 35%. So I know they're working hard in Italy, and I'm sure that they will succeed in the coming quarters.
If we move to the market and look across Europe, we see a lot of pressure on the regulation on the European banks. How will that affect Intrum, and how will that affect the NPLs that we are investing in?
No, I think it's clear, and I actually think that we talked about it in the last quarter. We see an additional pressure coming towards the financial institutions in Europe, both in terms of what ECB are doing in terms of putting in new directives towards the banks, but also the new legislation or directives that comes from the European Union, and on top of that, changing accounting rules. So we clearly see that the banks are looking more and more to actively work with their NPLs. We see it more or less in all countries where we operate. So that's good. That is driving volume, but maybe you can say mostly drive clear activity and dialogues between us and our clients, and that's good for business. So I think that this will be good for Intrum and good for the market for the years to come. So a very good and positive development.
Sustainability is a prioritized area for Intrum. For the first time, we've actually integrated the sustainability report into the annual report. Can you talk a little bit about the sustainability work that Intrum is doing?
First of all, I must say, I think that the way that we express ourselves in the annual report is clearly a step forward. This is a very important area for us and something that we as a market leader must be in the front line of, because we are actually driving the change in the market as such. For Intrum, as you know, we have labeled it that we are working for a sound economy, and that is important. We see ourselves as an integrated part of the financial system where we work with late payments, and we do it in a fair and an ethical way. We have defined a number of actions that are important for us and basically classify ourselves in the sense of being a sustainable company. We will talk much more about this. This is very important. It's important for our investors. It's important for the market. It's important for our clients, and it's important for our customers. And I think for us, it is actually part of being the market-leading debt collection company for the future. This is very important for us.
Looking ahead at Q2 and the remainder for 2019, what are the key points that you will focus on going forward in order to reach the targets that we have set for 2020?
I actually think we have a very good and solid plan for reaching our targets in 2020. Now it's about execution and continue to work hard on all the initiatives that we have. In Spain, I know they're working hard to mitigate decay in the portfolios, to integrate the acquisition of Solvia and other good initiatives that we see in the Spanish market. That's important for us. As I said before, the team in Italy has promised me to quickly get up to speed in the joint venture with Intesa Sanpaolo and mitigate the low CMS margin that we saw in the first quarter of this year. We will continue to work hard with the dialogue with large financial institutions in Europe to make sure that we have a relevant value proposition for them and continue to be there for them in the marketplace. We will continue to work with standardization of our CMS product, utilizing central resources to drive the scale in our operation. So all in all, this is a year where we execute on the plans. We don't need new initiatives. We continue to execute on all the good initiatives, but we also take with us a good start for 2019. EBIT is up 39% year on year, record profit for Intrum in the first quarter. So it's a good start, but lots of work going forward.
Thank you very much, and I think that actually concludes it for today. So thank you, Michael.
Thank you.